So staying on the topic of AI, something I really wanted, because you have this a great view on sort of all of this, the perspective from both the financial and the market. Databricks made a very interesting announcement about effectively, I forget what they called it, but not going public, but going semi-public, where they're basically going to start managing themselves publicly as like a public company and reporting financials and what have you, but not going public. So there was that part of it, and then they as part of that announcement, they make a reference to part of their business, and this is tying back into the AI story. So I'm just curious your read on that whole, I guess, the starting point of it as far as the non-public public thing.
Yes, Databricks has been teasing the market with an IPO for years now. Obviously, the stock market would love it because they love when new big companies come into the market and are available, especially in tech, which has been a hot vertical for years. But Databricks continues to refuse to go public, basically saying that they have the ability to make the moves they want. They have enough money on hand to be able to make investments, such as their big acquisition of Mosaic ML last year to be able to make custom models. And at the end of the day, they don't feel pressured to move into the IPO, probably because there isn't much money for them to make, quite frankly. If they IPO'd today, they would probably be going into a market where there's not that much upside and considerable downside if they miss a number by 1 penny or have any sort of significant executive changes. I think of Snowflake, which has had an awful week this week from a pure stock market perspective, even though honestly their product hasn't really changed. Their actual revenue and actual business have not really changed over the past week, other than their CEO stepping down and moving into their chair full-time into the chairman position and putting a technologist in charge. That's all that really changed. But everybody freaked out on the investor side, and Databricks probably looks at a move like that and thinks, why would we want to have to deal with the vagaries and the challenges of some random institutional investor and pressure to do random stuff.
Well, what I find, I mean, I think this is a longstanding sort of challenge, and in fact, I think it's been interesting, right? For a decade, it was like a single path. It was, you take your VC money, you go and you grow it, and you're either going to go IPO or you're going to get acquired, right? That was the path. And then we sort of saw this rash, I think, a couple different plays, right? One, the private equity play, where companies were going private, even if they'd gone IPO, to sort of get out of that spotlight, to get out of that quarterly driven thing. And then you have companies like Zoho, which have from day one vowed, not taking any capital, not going public, as a way to again keep that sort of independence. And so I think it's interesting. What I find fascinating about the Databricks story is that, of course, they were part of that first path, right? And so what I find really interesting is they, at least publicly, are claiming that they're really not getting pressure from their institutional investors to go public, which that's normally where it's coming from, right? It's like, we make this investment, we need to liquidate that investment. And so that I find probably the most fascinating about any of it. But so as I going back to the perspective I always try to bring, what does this mean? What is the so what for a CIO? Well, maybe nothing, right? A lot of this is just, other than for your personal investment portfolio, but maybe nothing. I don't know that it particularly changes anything. However, I do think, to your point, if I'm a CIO today, that potentially makes me feel a little better about investing in Databricks if I haven't already, because that means that I've got mature leadership that's looking at this and is not rushing sort of at all costs to do this. Second, that certainly speaks to financial stability, that they have the wherewithal to not feel like they have to go down that road. And I personally, I get very nervous. I mean, these large public companies that are so beholden to the street and making quarterly numbers, you end up seeing a bunch of these random acquisitions because they have to buy growth, or whatever, that often doesn't serve the needs of this of the buyer if you're the CIO. And so I look at this and say these are all very good signs from my perspective on how I look at it. And then, so I'd love you to comment on that. And then the second part of the story was almost an aside, but I found it quite fascinating. Talked about they did make an acquisition. I should have it up because I forgot the name of the company they acquired, but the company that basically helps their clients now build language models, large language models, or maybe not necessarily LLMs, but forms of LMs using this proprietary data, which, as you and I have talked about, I think is where this is all going, right? This idea of it's not just the LLMs, it's how you combine this with your proprietary data. And that is apparently one of the fuels that is fueling this growth and fueling this, because I think they were reporting 50, greater than 50% year over year growth in earnings or in revenue rather, which is just staggering, with as big as they are. So I found that kind of fascinating, and going back to this linkage of how critical data is to really creating advantage from AI.
Yeah, I think that one of the good things for Databricks is that their CEO, Ali Ghodsi, really comes off as somebody who is strategic in how he wants Databricks to grow, and seems to have both good control of the product development side, as well as, call it, managing the investor expectations. His investors don't give outward signs of being disappointed with the company at any point. And honestly, sales and growth have been good enough to allay any of those potential concerns. So I think the investors just see this as an opportunity to keep growing the business and be able to sell at its peak. And I think that financial perspective is a little bit of a change in the tech market, in that once upon a time you used to IPO to a certain level at a certain time frame, and then simply let it go in the public market, such as Apple or Microsoft did. But nowadays, investors realize, wait, we can hold on to a company longer and maximize our value proposition, and then sell high as we can get it. And we kind of saw that with the likes of Uber and WeWork. Not to say Databricks is like WeWork. I do not want to make that comparison absolutely directly, but there's this feeling of, well, we can maximize the value of the company and then sell, and then IPO when we've finally gotten to the point where we are near our maximum near-term valuation, rather than having to let it go and then see it 10x as a stock. I think that's not as great for the consumer investor, your Robinhood investor who wants to buy 3 shares of Databricks and make a bet. But it's great for these the Series A, Series B, Series C investors who see their investment keep going up and up and up without having to share that and get further diluted by public investors. So I think there's that, and I think it does give Databricks the freedom to be able to keep investing in companies like Glean or Mosaic ML. They care very much about being able to look at that data, being able to create these models, and being an end-to-end solution for machine learning and AI. They've been very clear about that. And 5 years ago, that was difficult for them because everybody wanted to buy some, Snowflake and just get started with their data. But at this point in time, as companies have basically figured out what they want their structured data to look like and are taking that next step, Databricks' long-term vision is coming to fruition and really paying dividends for them in terms of valuation, revenue, sales, all of that good financial stuff.